Don Luskin, utilities, all-time high. That means long-term interest rates are not going up.
No, it doesn't. It just means that utilities are wrong, just like the bond market is wrong. That's an easy one.
You got a lot of markets that are wrong now.
How do you think you make any money in this? You only make money in trading when you're right and the markets are wrong. That's an axiom, Larry.
All right, well, that's fair enough. So you don't buy the runaway bull market scenario?
No, I didn't say that. I just don't think utilities are the way to play it. You know, you talked about a correction. Here's the correction. This whole bull market that's been going on for now 3-4 years, that's a correction. That's a correction for a very sharp, steep bear market. We're now back up to even. Earnings have boomed. Interest rates are low. Everything's great. It's been a correction. Now it's starting to be a real bull market, and it can continue until the Fed kills it.
Do you buy Mr. Holland's idea of a 20% gain from here?
No, I think that's too optimistic, but we're going higher, no question about that.
All right, but Don Luskin, real fast, an inverted yield curve says bank credit conditions are tightening.
Yield curve has been saying that for the last year. It's been wrong, wrong, wrong. It's still wrong.
All right, so there's another one. The yield curve is wrong. The utilities are wrong. The bond market's wrong.
No,
okay.
I'm not wrong. I'm right.
All right, you're right. I love this. Don Luskin, let me start with you. What is the Achilles heel of this stock market rally?
The Achilles heel is the same one it always is, Larry. It's the Fed. Bernanke is just, I'm afraid, being too worried about the risk of contagion coming out of the cooling off housing sector. He's been afraid for the last 6 months that it's going to spill over and hurt the whole economy, so he's been keeping rates a little bit too low, allowing inflation pressures to build. I know they're not showing up now in the numbers, but they will. They're showing up in the dollar, they're showing up in gold, and eventually when they surface for all to see and for none to deny, Bernanke will have to raise rates, and that opens up the classic Fed risk of overshoot. But until that happens, it really is very, very nice.
Are you riding the commodity stocks? For example, the Morgan Stanley Commodities Index, new high. The Morgan Stanley Industrial Index, new high. Material. Is that how you're playing this until the big one hits?
Absolutely. That's what I've been telling my clients for a very long time. All the resources plays are the place to be. They are the leaders of this bull market.
Luskin, what are you looking for that's going to burst the bubble, quote unquote?
Gold 1,000. That's going to scare the bejesus out of Ben Bernanke, and that's where we're headed.
You're looking for gold 1,000.
Yep.
All right, we're on the record. Luskin, gold 1,000. Roll that tape.